Joining us now to the question of the day, which is, can Powell close the Fed market gap? There's a wide one. Market's not listening to the Fed. Can Powell do anything about it today? Bruce Richards, Marathon Asset Management Chairman and CEO, joins us now. Marathon is a $24 billion credit manager. Bruce, what do you think? Can Powell do it today?
You know, he's going to move 25 basis points and move 25 basis points again in March. And so he started with 25 basis points in March a year ago, and that'll be 500 basis points over the course of a year. And so it's all about Powell and Fed's credibility right now. I think you guys are spot on talking about this because the markets aren't listening to him. The forward curve is pricing in a 50 basis points easing by this fall. The markets are wrong. That's what we believe. The Fed will hold this line. So although they'll stop around 5, maybe 5.25, our call's 5, but that's all noise, whether it's 5 or 5.25. The point is they're going to stay at 5 for an extended period of time, much longer than what markets expect, because the market's expecting a pivot, and there's no pivot coming, we believe.
Bruce, is the Fed going to stay at that elevated rate because it's worried about its credibility, or is the Fed going to stay at that elevated rate because it's worried about inflation?
It's both, but primarily because of inflation. And so here's the most interesting scenario. So let me give you two scenarios. Inflation stays, it rolls over completely to 2. Does the Fed ease? Not if the economy is still growing at a nice rate, and I believe the economy is still growing at a nice rate by year end, if it rolls to 2. Now, that's not our base case that you roll to 2, but that'll be a shock to the market if you roll to 2 and the Fed doesn't ease, because if the Fed eases at 2, it's just going to reignite inflation because the economy will be too strong not to reignite inflation. But then if inflation rolls over to 3 to 4%, and we think that's where it's going to roll over to by year end and stay there for a bit, then there's no way the Fed is easing. So we think the market's got it wrong. That's why the market's so vulnerable. And you should use this January rally as a way to kind of reposition, because when you have liquid markets on the way up, you don't have much liquidity on the way down. You should definitely be using this position to rebalance your portfolio.